Hey everyone, welcome back to Corporate Decoder. We're diving into the world of ETF reports, and trust me, not all reports are created equal. Some are about as exciting as watching paint dry. But this report actually may have many actionable intel. What kind of world-shaking information could be hidden behind corporate buzzwords? Let's find out together. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join us to continue the conversion on deep dives. Today we're cracking open a report from New York Life Investments ETF Trust. This isn't your typical stock, it's about exchange-traded funds. Think of these as baskets of investments designed to mimic certain markets or strategies. We'll focus on a few key ETFs within this trust. In particular, we will focus in Hedge Multi-Strategy Tracker ETF, since some exciting name changes went recently, but also Merger Arbitrage EFT and Candrium funds. First thing, and of most interest to the day-to-day investors, let's talk costs. One of the main interesting areas is NYLA Hedge Multi-Strategy Tracker ETF, where you see the costs of having 10,000 invested for the year. What you really paid is 55 Oriston. Why is this interesting? Because while a company could change names, investment style, and strategies, the management effectiveness can be seen by how well managed to keep the costs down. In this situation, it seems that's the case. Now let's break down what actually made these funds tick. For the Hedge Multi-Strategy Tracker ETF, credit-sensitive exposures like convertible bonds and investment-grade debt really helped boost performance, especially with those high interest rates we've been seeing. Also, the international exposure helped soften any downs from the US market volatility. Smart move there. However, not everything was a win. It seems that equity market neutral short positions weren't great. A little setback on an otherwise good report. Now let's quickly check those performance numbers because nothing is more important than raw return. If you were to put 10,000 back in 2015 into the Hedge Multi-Strategy Tracker ETF, but comparing to other options, S&P 500 gave you 3 times more money in the end compared to the Multi-2O Strategy Tracker. But that's normal. Remember, as the report mentioned, the NYLA Hedge Multi-Strategy Index seeks to achieve performance similar to the overall hedge fund universe, which is all about hedge funds, which tends to be risk adverse, and it has delivered. Jumping to the NYLA Merger Arbitrage ETF, we also see a boost. 1159 cap to increase in the last year is actually pretty neat. The strategy here is completely different than the one you see previously. The objective is to identify opportunities in announced mergers, acquisitions, and other buyout related transactions. And for such performance to be in similar rates to the S&P, it's pretty neat. Now this only tells you part of the story since it lacks longer exposure, seeing that the 10 years numbers are not even close to S&P, but you need to evaluate based on what it delivers over its wife Fine Ein. Now focusing on something very different, NYL Candrium International Equity ETF. This one focuses on international stocks that meet certain environmental, social, and governance criteria. If you are looking for something that sounds good, you may feel good, but good feelings don't pay your retirement bills. A lot of long words were being used to mask what's happening, strengthening developed international equity markets, as the fallout from escalating US tariffs reoriented investor expectations, but it only added 11.63%, so it doesn't pay to be extremely conscious. You could deliver much more. The fund even uses new words I never heard before, like tariff-related, trade tensions, and protectionist policy. In the future, when you hear lots of new words, you know what's up. But what I found extremely interesting is this point. It shows the top countries in its holdings to quickly talk about holdings compared to others with similar number of shares. These shares' return is a sign of management. Speaking of which, the top 3 regions for the Candrium fund are as follows. Japan, which as we discussed is the top performing one, United States and United Kingdom. You can also the full percent breakdown per region and make comparisons. Candrium US Mid-Cap Equity ETFs report is also something very peculiar. As it mentions, the performance of the fund reflected a market shaped by early economic resilience and policy optimism, followed by disruptive shifts under the Trump administration and sector-specific pressures. And then just as it quickly comes to the point, it says the fund mirrored the broader mid-cap trends. I would say this is the main summary here, which has its pros and cons. As a big disclaimer, keep in mind that past performance, that can be good or bad, it is just not a good predictor of how will funds and etc. will perform in the future. A common point between multiple changes from here is that NYLI now manages some of the IQ funds, for example, from IQ Candrium International Equity ETF to NBLI Candrium International Equity ETF, to meant to look to affect the end result to the shareholders though. Now that we've covered the report section, let's check on the less noticeable areas. Every registered company requires something like it. It's a documented code of honor that the executive team must have. The audit committee needs an expert and is good manners for the company to declare it, and we see the expert is Michael A. Pinataro. Now, as with any responsible company, you don't want to cheap out on audits. These costs are generally to make sure that all are kosher. In this case, the audits cost the trust above 230,720 XM for 2025. To add context, the NYR US Large Cap R&D Leaders Index seeks to provide exposure to innovative companies, and they show the top 10 holding and/or issuers. All this is pretty standard, but wait, is it that simple? Crazy, so where do we land with all this? New York Life Investments ETF Trust operates a mixed bag of ETFs. The hedge fund multi-strategy tracker promises stability in volatile markets, but hasn't delivered top-tier return-free SG standards while providing portfolio diversification. One interesting point is that New York Life takes management of the funds, but also many cost is still dependent in the broader market, a situation where rising costs may become a problem in bad market dynamics for the management activity, providing a different path for investors willing to understand arbitrage. With high beta, but its success depends heavily on deal selection, their Candrium International funds align new investment to ESG standards while providing portfolio diversification. One interesting point is that New York Life takes management of the funds, but also many cost is still dependent in the broader market, a situation where rising costs may become a problem. So take all this information and plan your investing accordingly, depending on which fund suits better your objective. What do you people think? Would you consider to add some of these funds to your investments? Let me know in the comments below for discussion. Also, don't forget to take a look at our Discord server. If you found this analysis useful, remember to hit the like button. Really helps, and please subscribe so I can be motivated to do more deep dives. See you in the next one.